new Black Wall Street. Do it right, build wealth, live life, economic empowerment, real tips, insight on the new Black Wall Street. It's on the new Black Wall Street. He's your host.
Hey, Grand Rising to you beautiful people, man. Thanks so much for joining us here today on the Money and Power Show, presented to you by the New Black Wall Street. I want to welcome you to Wall Street, man. I'm your host, ERGJ, your certified financial educator, CEO of ERGJ Enterprises, ERGJ Black Bazaar, and international best-selling author of the book, The Black Billionaires Club. That book there is a study of Black wealth, guys. It's a study of the 12 richest Black people in the world today and how they built their wealth. And I just truly believe that if you want to be wealthy, you should study wealthy people. Well, you can find that book by simply going to the website, theblackbillionairesclub.com, theblackbillionairesclub.com. Pick up your copy here today. Hey, man, good morning, man. While you guys are connecting, go ahead and let us know where you're connecting from, what city, what state. Love to know where you are connecting with us from this morning. Just love to be able to, really know how far our reach is. Also, hit the like button, the share button if you care, the like button, the share button if you care. We're talking about financial education. Yesterday, we talked about how financial education is actually a personal decision. It's just something that you simply have to decide that you want to do. And what I particularly, teach is basically investment education, how to learn how to make your money work for you while you sleep. And Warren Buffett says this, who's my mentor. He says that, man, if you never learn how to make money while you sleep, then you'll always be working for it. All right. If you don't learn how to make money while you sleep, then you'll always be working for money. And so there's some principles that you begin to understand that you can actually have your money working harder for you than you work for it as you build up your capital and then put it into places that it can grow. And then it gives you an opportunity to live, to ride off into the sunset and leave an inheritance for your children's children. So welcome, guys, to Wall Street, man. Our sponsors for today is ERGJ Black Bazaar, the Afrocentric marketplace, which specializes in Afrocentric home decor, personal care products, and also Black art-inspired gifts, man. Check out the website here to pick up some pretty cool stuff at www.theblackbazaar.com, www.theblackbazaar.com. Man, you got personal care products, your bamboo toothpaste, you got tapestries, shower curtains, duvet cover sets, all cool stuff that you might want to add to as a gift for yourself or for someone else. Check out ERGJ Black Bazaar, the Afrocentric marketplace. Want you to remember this, guys, that once you shop Black, you never go back. Our other sponsor, man, is also Big Sis Media. That's right. Big Sis Media is a full service creative design agency, which specializes with helps their clients communicate through video or visual and digital media. They're there to watch over your most critical creative needs, like a Big Sis would. Man, check out the website again for all your help there with your websites, things like that, at bigsismediagroup.com, bigsismediagroup.com. Hey, man, don't be a stranger, guys. Go ahead and say hello to us this morning here as we are welcome to Wall Street. Tell you a little bit about what we got going on, that we're broadcasting here on Facebook, Instagram, and also YouTube Live. And then also you can check out our YouTube page for anything that we've done previously, or our Facebook page and videos. Now, here's the deal, guys. We are going to catch up on some news that you can use here today. Also, we'll be taking a look at Delta Airlines. We're going to do that yesterday, so we're going to do it today. I'll try to do a stock of the day every day because there's so many of them. As you guys come across some things, I may just come across it and do some type of analysis. Now, I do tell you guys that, as it relates to any questions that you have about money or finances, make sure that you inbox us so we can incorporate it into the show. So we can, we can provide some of this content on financial education that people simply have to choose to tune into. Now, it would help us if you make sure that you subscribe on our YouTube channel, and then also support us on our Facebook channel. That'll help us to continue to bring great content to help us to understand a little bit better about this thing called money, and particularly about investing. I do want to, I will be bringing on more guests, especially when it comes to Forex. We got a show coming on Thursday, real estate, things like that. So things that you guys may want to know, I will have guests to be able to bring some more insight as it relates to money and power. I want to bring on some guests as well in the political field to help us understand politics a little bit better, because I believe that's the power part of the economy who makes the rules, right? That all of us have to follow. Who makes the rules that we are subject to follow? Again, guys, let us know. Good morning to you. Still haven't had anybody say in the comments. Let us know that you are here. Let us know where you're connecting from, what city, what state. Rep your city, rep your city, rep your city. Well, here's the deal, guys. I want to get right into this thing today because we really don't know. I normally get to talking and then time just kind of flies by, and the next thing you know, we're like the end of the show, right? So we are going to start this morning with our inventor of the day. This comes from the text from the African American Inventions that changed the world. African American Inventions that changed the world, and our inventor for today is Granville T. Woods, a brother. Granville T. Woods, a brother. And his inventions are this. In 1887, Granville T. Woods invented the multiplex telegraph. This device allowed train operators to communicate with each other. It also helped them avoid collisions and other dangers on the tracks. Woods made railways much safer. He has nearly 60 patents to his name, and he revolutionized the railroad industry. Woods was inducted into the National Inventors Hall of Fame in 2006. So our African-American inventor of the day, Granville T. Woods, who made a contribution to our economy in the railroad industry. And I think what I'll do is, in honor of him at some point in time, we'll take a look at some train stock or something. I don't know much about trains, but that's in the transportation field. So he's some railroad companies, I guess TSX or something like that. We'll take a look at something in that in the railroad field. Let me remind myself because I will forget. We're going to take a look here, something in the transportation and railroad industry. Now, what we're going to do, guys, we're going to get right into this thing here today as we start taking a look at what's going on in the market with some news that you can use in the market today, guys. So we'll come on over here to CNN and we'll see what's going on. Now, it's very interesting, man. When I take a look at some things with CNN, the stuff that I kind of look at in the evening, I'll be trying to look for it and it be gone because they start updating their stuff for the morning time. And so we're going to take a look at some news that you can use as relates to what's going on in the market. Of course, we're still, dealing with the coronavirus, still dealing with price wars and oil. But I believe, obviously we had it was a terrible day in the market yesterday. We'll see that in just a second as we do our market recap. But I believe, as fearful as it is, we're getting ready for a return. We're getting ready for a comeback, and we'll take a look and see what's going on here. So our very first highlight that they have here for CNN, an unsettling reality, a short, sharp global recession is starting to look inevitable. I simply don't believe that. We may hit a short-term recession as it relates to when they call it a recession or a bear market. They're talking about a drop of about 20% in values of companies. That may happen, but I don't think it'll happen for a long period of time. Not quite sure, obviously the spread of this virus, the outbreak, is still continuing, but people are, they're putting their mask on, they're still working, they're still producing, they're back to making stuff, but we still have a little ways to go as it relates to some recovery that could happen in the market. And when I say the market, guys, really, just think about, if you haven't already, you probably, if you have not already, you may have taken a look at the market, like your IRAs and 401ks and things like that you might have. That's the market, guys. So it's still kind of relative to you if you have any money invested in the market in any form or any type of way that you might have it, right? So again, your retirement is connected to the market. Your life insurance more than likely is connected to the market. These things are all relative and worthy of conversation. As it relates to understanding, again, financial education, as it relates, especially if we want to be able to live the kind of life we want to live when we can no longer work anymore. So global stocks and oil amount of recovery with Dow futures of gains 1,000 points. So the futures market kind of gives an indication to what our day will look like because this is something that takes place overnight. And so they're saying, hey, man, we're probably looking at a quick recovery, or not a quick recovery, but a little bit of a bump up for global stocks, which will be Chinese stocks, Korean stocks, stuff that's outside the United States, and then also oil, right? Oil is mounting recovery. So we might see a pretty good day, which actually, because we had a sharp decline. It was about 10%, 7-8% yesterday. We're going to see some type of recovery today. And I don't know about you, but I'm trying to be a part of the recovery. Yeah, I want to buy that low when it gets super low and be a part of the recovery. Not that we still won't have some trending down stocks, but it's kind of giving us an indication here that oil might rebound a little bit from its super, super low. We'll take a look at that in just a second here. So that's the stock futures. And I'll probably do something on futures to help us better understand what this is talking about. I know I had a good friend who really traded futures. I reach out to him, see if I can get him on the show, talk to us a little bit about the futures market. I rarely hear anybody talking about the futures market, by the way. We hear Forex, we hear real estate. We don't really hear, I don't really know many commodity traders, and I don't know many futures traders. So that'll be interesting. U.S. stocks are near a bear market. Here's what the last 12 years look like. What's called the last 12 bear markets. We're going to take a look at that article here today. The bull market is 11 years old. It's talking about since Barack Obama's been a president, that the market was continuing to rise up and up. Low oil prices could damage the U.S. economy. Probably so. What oil pricing crashing and what it means. And we're going to take a look at that article as well. What the oil crashing means, what that really means. We'll take a look at that article here this morning. Starbucks has a new testing cup. I don't see anything else here that may be of interest. United States and Airlines are cutting U.S. flights. United and JetBlue are cutting U.S. flights. We know about that. Let airlines face $113 billion hit from the coronavirus. So airline stocks are no bueno. So let's take a look at the market itself, and then we'll take a look at those two articles. And then I think what I'll do is I'll come back and we'll look at airline stock today, which is Delta Airlines. We'll do that. All right, we will do that. So what's going on in the market, man? Here's a market recap, guys. A market recap for today. Good morning to you. Still haven't had anybody say good morning. I mean, what kind of thing we got going on here? Here's a quick market recap for today. Take a look at what happened yesterday in the market. As I said, a very, very bad day in the market, down 7.5%, almost 8% for the Dow. The Dow is basically saying, hey, I'm investing in America. It houses 30 of the most significant stocks in America, which includes Delta Airlines, includes Disney, includes Apple, and Nike. Home Depot, I keep going on, Walmart. So it was down almost 8%. That is insane for a day. One day to drop 8% in the market is super, super scary. I mean, super scary, but not too scary for me. But it's down 2,000 points. The NASDAQ, which is a index for a lot of technology stocks, Google, Amazon, stuff like that. Facebook down 7%, down 624 points. S&P 500 as a whole down 225. So you did have some stocks that are outside of the NASDAQ and the Dow, which individually may have had some good days, but generally speaking, the whole market was down as a whole. Generally speaking, all right, when we lump everything in together. Now, yesterday, our gainers yesterday, AutoZone had a good day yesterday. Not quite sure what's going on with AutoZone. Maybe they reported earnings or something like that. Cabot Oil, which is very interesting. An oil company had a good day yesterday, which is interesting. Advanced Auto Parts had a decent day. These are interesting. I don't know why they had a good day. I'm not quite sure. Clorox up 1%. Consolidated Edison. Now, when you see stuff like this, say, man, these few of these companies actually did okay. When we had an 8% drop overall in the market, it'd be interesting to look at this contrast. Now, what drove the market down was basically, as I said, oil companies and energy companies. So Cabot Oil did okay, right? But Halliburton, Marathon, Apache, Occidental Petroleum, energy stocks. I mean, Lord, look at this. Energy and minerals down 40%. I guess that's for the year. 40% down for the year. You talking about companies that are super, super on sale, companies that are hitting a clearance rack. I mean, my goodness, you could probably find some great, I ain't gonna talk about what you can do. I can find some great value in the energy sector. That's where I'm looking. I'm trying to find some diamonds in the rough, because down here in energy, it is rough, baby. I mean, oh my goodness, it is rough. And right behind energy, because it relies a lot on energy as well. The coronavirus outbreak is having an impact on transportation, which is down 20%. I guess that's for the year based upon CNN. I'm not quite sure if this is a yearly thing, but my goodness. So energy, transportation, and then you start looking at finance and commercial services, all in negative double digits for the year, while consumer durables and utilities is up. Now, what does that tell you guys? What does that tell you? That consumer durables, which is, basically stuff that you and I buy on a, regular basis at the house, water, stuff like that, snacks, stuff to eat, right? That is good morning to you, Phyllis. Thanks so much for joining. What's going on, AV? Good morning to you. Thanks so much for joining here this morning. Those things, when people get, obviously with the coronavirus taking place, people are going to the stores to get their medicine. They're going to the stores to get their masks. They're going to the stores. Oh, I got black seed oil, by the way. If y'all need some black seed oil, I do have that to sell. Also just got some hemp cream in, by the way. Got that as well. I do have your natural personal care products again over at ERGJ Black Bazaar. I'm going to come back to that later on, because again, guys, you guys doing all this shopping, might as well shop black. And we do have some of that stuff available for you, some natural products that you can use to get you through this tough time. But consumer durables is up. Utilities is another defensive play, because utilities doesn't really move. It just kind of stays where it is, because people got to pay their light bills. People are going to pay their gas bills to stay warm. So those are like the utilities are the true defensive play when all of this stuff is taking place. And then we see a bump in consumer durables, which is doing relatively okay compared to the market, because that's where a lot of money is being spent. So think about it this way. When, because we only look at it probably from a consumer standpoint. When people are spending money in one particular place, one particular area, that company or that thing or whatever is typically going to have a bump in its value, because many people are spending money there because there's a demand for that product or service that is being offered. So, one thing I think about, like I think about Chick-fil-A. I think about, I'm here in Atlanta. I think about Slutty Vegan. These are two restaurants that are always packed, no matter where they go, which is was considered to be in high demand. Which if something is in high demand, it is relatively of great value to the community, right? And if it's of great value to the community and it's in high demand and a lot of money is being spent there, then typically you can see investors, look to acquire portions of that company, because they see that company is bringing great value to the community and there's a high demand for the product or service that particular company is providing. Now, the other part, though, is that we may look at it, we can see it maybe from a consumer side, but we don't really see from the commercial side, right? Businesses that are spending a lot of money to do whatever that they are doing. So that part is what's kind of missed from an analytical or from an analytical standpoint as it relates to analyzing the market. Where are companies spending their money? Where are big dollars going? Right? This helps to make a better decision as it relates to any particular company that you may look to evaluate, or any particular company or stock that you might look to acquire. Okay. So oil again is down 33.79. This is a low for oil. It gets to $30. I'm like, this thing is going to rebound. Gasoline's down 184. We have gold at 16.64 per ounce, silver at 17.10, and corn at 375.75. Again, the Dow for the year is down 16%. NASDAQ for the year is down 21%, and S&P 500 is down 15%. So no one is feeling good right now as it relates to their portfolios for 2020, particularly for those that just have their money invested in a 401k or something like that. But don't panic, right? Do not panic. Do not panic. Don't be like everybody else that's down here in extreme fear. Don't be like those people, right? You must have faith, great faith, during times of fear. Now, here's the thing I said yesterday. Let's not act like this coronavirus or an outbreak is something that's new. Like, let's stop acting like we have not seen something over time that has been an outbreak, something that's caused people to die or cause panic. Let's not act like there have not been natural disasters. Let's not act like there have not been breakouts before. So this is not something new. All we got to do is just go back in history. And what really bothers me, you know what really bothers me, guys? Let me tell you what bothers me. What bothers me probably the most, right, is for all of these God-fearing people, right? All of these God-fearing people. They're in the mosque. Well, I'm thinking of the church. They're in the temple every Sunday, right? Every Sunday they're in the temple, and according to that book that I read, that is represented by those that go to the temple, there was something back then called the 7 plagues, right? The plagues that hit Egypt. This is nothing new. So the plagues that hit Egypt, right? The frogs and the beetles and all of that stuff. So who knows the 7 plagues, by the way? Anyway, these were viruses that hit the people of that country or that community at that time. A lot of them were killed, and there was a remnant that was saved, right? There was a remnant that was protected while everybody else was going down. You got to ask yourself: Are you with the good folks? are you in the land of Goshen? You know, are you protected by the blood, right? If you are, then why? I just don't. It's hard for me to capture, right? To go to a place every week, every Sunday, and you're supposed to be building your faith, but then something like this happens and you get all scared. I just don't get it. I just do not understand why. I just don't get it. I'm like, why would I go there with y'all? I got more faith. That's why I think he said that look, that brother had more faith than anybody had come across. He wasn't even following him because he just believed. I just believe, man. Like we seen this before. Nothing new under the sun. This too shall pass. Everybody put in the console, this too shall pass. This too shall pass. It's like everything else that has come and gone. There's nothing new under the sun. This too shall pass. That's gonna be my headline, my meme of the day. I just wanted to get that out my system because I've been meaning to talk to somebody about this. Maybe y'all will listen to me. All right, let's keep going. Let's keep going. What's going on with you? My main man, Mr. Antoine Lowry. Thanks so much for joining. What's going on with you, Carter Mose? What's on with you from Atlanta? All right, let's keep going, man. Welcome to Wall Street, guys. All right, we said we're going to take a look at a couple of articles real quick, right? So the U.S. stocks are nearing a bear market. Here's what's caused the last 12 bears. Again, this too shall pass. There's nothing new under the sun. We've seen this before, and every time we've seen it, we bounce back greater than we bounce back like a rubber band, greater than we see. All right, that's what happens. You can pull a rubber band, right? And let's just say this is the recession. You pull the rubber band back, right? You pull the rubber band back, and this is the drop, right? But when it bounce back, it's gonna go further, right? It's gonna go further that way than it was that you pulled it back. I might only pull it back this far. That might represent the market right now at 8% down. But then when it slingshot back, shoot, it might go up 12%. It might go up something like that, right? That's what's going on. What's going on, bro? That's what happens, right? So let's keep going, man. So here's what's caused the last 12 bear markets, guys. The last 12 bear markets. So they're predicting, they say, hey, man, we might be hitting the bear real quick because we always get to 20%. What they say, 20% hitting the bear. So long as the bull market in American history turns 11 years old on Monday, but investors are hardly celebrating the bull market faces the gravest test yet. They always use, no, it's not the greatest test yet. Rapidly speeding virus that threatens to tip the world economy into a recession. Oh, Lord. Over the last couple of weeks, coronavirus fears have transformed a once booming stock market over the prior 12 trading days, so S&P 500 down 12%. If the decline continues with S&P plunging 20% below its record high, the bull market that began in March of 2009 will officially be over. And a bear market will have begun on February 19th of 2020. Remember that date, 2/19/20, when S&P closed at an all-time high, right, of 33.86. Now, here's the deal, guys. The thing can't keep going up forever. There has got to be pullbacks in the market, period. Now, what causes those things to happen? All different types of stuff. But nothing lasts forever. Nothing goes up forever. And here's the deal. Here's what I want you to understand. If it did go up forever, right? Let's just say if it did go up forever, then you probably would never invest, right? You probably would never invest. Why? Because it's going to be more expensive tomorrow than it is today. But then when something actually pulls back and it gives you an opportunity to buy something that you wanted at a cheaper price, why do people get scared? That's what I don't understand. There's nothing that's relatively changed about the value that a lot of these companies are bringing to the marketplace, to the world, right? There's nothing changed about that. There's nothing changed about the demand for their products and services either. The only thing that's changed is that, hey, I can't just buy it right now because my money is going towards defense. My money is going towards medicine. My money is going towards health. But then as soon as I'm clear, as soon as I'm healed, as soon as the market is healed, then the money goes right back to where it's been going before. This is just insane. But you know what? People are reactionary. They're emotional, right? Money is not here. The whole process and thought process when it comes to money is not up in the mind. It's not logical. It's all emotional. People make decisions based on how they feel, based on what has happened, what is happening in their life right now. They typically are not thinking and making smart decisions. They're typically reacting and making dumb decisions. Let me say that again. They're typically not thinking and making smart decisions. What we typically do is we react, right? What do you do when you get mad? You probably do something stupid. What do you do when you get sad? You probably do something stupid. What do you do when you get happy? You probably do something stupid. Right? You probably do. Okay? And I'm not talking about you particularly saying. I'm saying you as in the whole human race, right? We do not operate through our natural instincts. We operate, who knows? I can't even explain. Right? But you know what I'm saying? But once you understand people, then it gets a little bit easier because you know what people are going to do. Just like a lot of people know what we're going to do as far as African Americans are concerned. They know where we're going to spend our money. They know what we like. They know where we like to spend our time. They study us. And what I've been trying to tell people is study money and study people. Because why? Because people spend the money, right? People spend the money. Let's keep going. Bull market that began in the ashes of the Great Recession. S&P 500 spiked 339% in 132 months since that March 2009 low. So ever since the Great Recession, as you guys probably remember, back in 2009, right, the market has jumped up almost 400%, 300%, more than 300%, right? So here's 13 historic bull markets, which is what they're saying that we might be getting into today. So we had the recovery from the Great Depression, right? The Great Depression back in 1932. It was a bull markets which occur when the stocks rise 20% above have happened 13 times. S&P 500 since the Great Depression. Okay, so recovery. They're talking about a recovery here. It looks like recovery from the bull market. So there was a Great Depression that happened in 1932. There's a recovery from that depression, 57-month recovery at 325%. There was a recession or a bear market that took place. World War II was at war, 1942. Right? The recovery took place, 49 months of recovery from that time of war. 158%. There was a post-war boom in 1949, right? So there was a little bear market that took place during the war in 1940. I don't know what that was. Maybe that's Civil War. I don't know. World War III. I don't know. I don't know what war that was, but it was 86-month recovery at 266%, right? The Cold War, right? The Cold War took place 1957. There's a recovery from that, 50 months. 86%, right? JFK, right, aims to get America moving again. Look at that. So JFK had to get America moving again, GAMA, and then we got now Trump who got MAGA. Isn't that interesting? Interesting. So anyway, in 1962, so JFK during that time, 44-month recovery from a bear market, 80% return. The go-go years in 1966. 26%, 26-month recovery for 48%. Nifty 50 in 1970. We had to look and see what all this stuff is. They got all this stuff here, recovery from the Great Depression. We can read all that. They had the World War II that drives the economic activity. They had the post-war economy boom. You guys can take a look at this article here on CNN if you want to read through all this stuff, but I'm just going to give you the highlights of it. The modest bull in 1974, recovery 74, 126%. Reaganomics, if you guys have been born back when Reagan was president, 1982, man, it was a 60-month run, right? 229% acceleration in the market. Black Monday, comeback, 1967, right? 31 months, 65%. The roaring 90s. In 1990, you had that covered. 13 months, 47%. The housing boom. So we had the housing crisis, housing fall in 2000. Had the housing boom 2002, 60 months, 100% increase. And then we just had the long, slow recovery, which is from 2009. We just had 132%, 132 months where we're currently in at 338%. So these are the recoveries from bear markets that are taking place. We might be hitting a bear market pretty soon, but guess what's going to happen after the bear? There's going to be a bull, right? And the bull typically lasts longer than the bear, right? The bull typically lasts longer than the bear. Let me say that again. The bull is stronger than the bear, right? In order for the bear to win in this fight, that means that the bull would have to kill. I mean, the bear would have to kill the bull. Bull just means going up. Bear just means going down. In order for the bear to win, ultimately, in this pull and pull, in this fight, then the bear would actually have to kill the bull. The bull never has to kill the bear. Bull doesn't have to kill the bear, but the bear has to kill the bull in order for the bear to win. Does that make sense? In other words, the whole economy has to crash. All businesses would have to go out of business, right? That's what would have to happen in order for the bear to win when we start talking about bull versus bear. So the bull is stronger than the bear. I don't see any way in life that the bear, in my lifetime, that the bear could actually kill the bull. He might slow him down, might get in his way. You know what I'm saying? Might be considered to be a little obstacle. Might have a few months of recession, right? Or even a year or so of recession. Who knows, right? But then you go on this long stretch of a year, year and a half, 2 years, 3 years. Now we're into 11 years of recovery or 11 years of appreciation. The bull is stronger than the bear. By putting that in comments below, the bull is stronger. The bull is stronger, right? You said the Cold War began in 1947, 1991. No, Miss Phyllis. They got the stuff here. They saying here that Cold War was back in 1940 something, right? Here 1957 to 1961 was the recovery, right, of the Cold War that took place. I don't know when the Cold War was, right? I mean, I had to go back. Between 1957 and December 1961, that was the recovery after the Cold War. Okay, something like that. All right. So the bull is stronger than the bear, and even if we do hit a recession, a short-term recession, we will bounce back because that's just what happens. There's nothing new under the sun. Now here I want to look at why oil prices are crashing and what it means. Why oil prices are crashing and what it means. So oil prices have suffered their biggest fall since the day in 1991 when Americans forces launched airstrikes on Iraq troops following the invasion of Kuwait. Monday's crash spooked markets that are already freaking out about the impact of the corona pandemic. Right? We got that. Here are 5 things you need to know. Why did Saudi launch a price war? So simmering difference over how best to manage global oil markets spilled into the open at a meeting between OPEC and Russia in Vienna on Friday. After Russia said it was ditching the alliance, Saudi Arabia warned it would live to regret the decision. Sources who attended the meeting told CNN Business. So there's a kind of a fight between, there's no longer a pact between Saudi Arabia and Russia. So Saudi Arabia said, we got to do what we got to do. Right. So in order for them to continue to be profitable in that industry, They had to lower prices in order to compete. So it's all about competition. So I'm not going to read the rest of this. Which country would be hurt the most? A price war is in the face of collapsing demands is not a recipe for oil stability. It's difficult to see any winners. The major oil producing countries will lose money regardless of the market share they can claw back. Russia claims to be the most insulated to lower prices because its annual budget is based on the average price of roughly $40 a barrel. U.S. sanctions have forced it to become more efficient. So sanctions are just basically taxes that the U.S. has placed on different countries in order for those countries to still do business in the United States. We'll take a look at some of this stuff as well. I'm probably going to read this on my own. I think this is probably a little boring article, but just kind of, give you some ideas, some things that you can pick up and read that may be of interest to you as it relates to that. Between USSR and the U.S., I believe. Between Russia and the United States, you believe? Okay, fantastic. Miss Phyllis, she's doing it this morning. That's right. The bull is stronger. That's right. Bull is stronger. Between USSR and Australia. What's going on? What's going on with you? All right, let's keep going. So what I said we're going to do today, guys, welcome to Wall Street again, guys. You guys just joining. Let us know. Connect with us. We'll take a look at Delta Airlines today as our stock of the day, okay? Our stock evaluation, our stock look, our stock watch. We're going to call it stock watch. Our stock watch of the day, Delta Airlines. Now, Delta Airlines is in the transportation, obviously, airline industry. It's being hit hard by the coronavirus, and I figured it'd be something good to look at just to see what's really going on, what's Delta all about. So anyway, Delta is currently a $43.51 per share. That's how much it costs if you want to own a share of Delta. It's $43.51. Okay. My bad. I'm just pressing stuff. Stuff is just popping off on my. Nope. Close that. All right. They're down 25.5% since the beginning of the year. So year to date, down 25%. Obviously, a big part of that, the coronavirus. So year to date, a quarter, 25% is a lot. Is a big drop. Think about that for a second. 25%. In order to recover from 25%, you have to gain what? 50%, right? So if I drop 25% from whatever my price is I'm currently at, if I'm down from $60 to $45, in order to go from 45 back to 60, I'm actually going to increase more than 25% from 45 to 60 than I would drop from 60 to 45. This is why appreciation is so great, because you can buy something lower, but then you can, boom, you can go from 40 to 60 is a $20 jump on top of $40, right? So that's a 50% increase. But a 50% decrease from $60 would be $30, right? If I was to cut 60 in half, that's 30. But if I was to cut 60 in a quarter, that's 45. So, you know what I'm saying? So to go from 45 to 60 is a greater return, a greater appreciation than to drop from 60 to 45. Does that make sense? This is not simple math, but it's, something that we learned in math, right? Let me say that again. 50% drop from 60 will be 30. A 50%, but a 25% from drop from 60 will be 45. All right, $15 from 60 is 45. $30 from 60 is 30. But a 50% jump from 30, right? To go back to 60 from 30, I have to go up 100%. 30 plus 30 is 100%. If I were to go up 50%, that would mean I would go up from 30 to 45, right? If I was going to go from 45 to 60, which is a little bit harder math in my head to do, right? That wouldn't be 25%. I think I would have to go up maybe about 33%, something like that, right? But you get my point, right? That's why buying low, selling high is still a great formula, because I can going up increase, it gives me great increase. Right, but going down, I only see a measurable decrease unless I go down to zero. Right? Let me say that again. Going up, right, from 30 to 60, 100%. Right? Going down from 60 to 30, 50%. Right? So it's easy. It's literally easier for me to double my money going up than it is going down. Oh my goodness. Y'all heard that? It's really literally from from a long-term perspective, it's easier for me to double my money going up than it is going down. Right now, you can make money both ways. You can make money going up, you make money going down. Right? In a time like this, if you do, you should be doing good, shorting stocks, right? If you do that, options, stuff like that. But generally speaking, for the common investor, the common person, good morning to you, Mr. Peter Keith. It's going to be easier for you to double your money going up than it would going down. Now, Delta Airlines. What's going on with you, Mr. Peter Keith Grant? Thanks so much for joining. So Delta Airlines here, guys, take a look here. Some of its financials, man. It's a $29 billion company, which is very interesting to me. I would think that Delta Airlines would be much bigger than $29 billion at this point. I did not think, I thought that they would be in triple digits, billions, $290 billion company. It was only a $29 billion company, which is not bad. I just would, if you were to tell me that Delta, without me having a look at this stuff, if I were to guess about how big or large Delta Airlines is, I would think that they're a $100 billion company. Just because of how long they've been, one of the largest airline companies in the world, I would not have thought, I wouldn't even been close to 29 billion. So relative, I mean, I can't say that's small, but when you start looking at all these multi-billion dollar companies, that's they still probably have some room to grow. Anyway, so earnings growth last year up 28%, down this year down 4%. Earnings growth for the next 5 years 8%, and the revenue last year that they got was at 5.77%. Their net profit margin last year was 10%. So they got a 10% profit margin off of last year's results. They're going to be reporting again on April 9th, 2020. And then you see all of these airline stocks that are in competition with not doing well. You have, they're based out of Atlanta, Georgia in the transportation industry, based upon what analysts say at $43 per share right now. They say, hey, a relative high over the next 12 months for Delta could be as high as $90, but a median of about $65. So if they just got back to where they were from where they are right now, that would represent almost a 50% growth or 50% growth. That's why, during this time like this, extreme fear, you can invest in some relatively valuable companies for half or even 25% off. Think about this. All right. We could just say basically, we know, where Delta was, right? $63.44 per share was a high for them over the past 52 months. And we can, if we believe in Delta, right, we could just basically what we can say is, man, Delta is 25% off. Everybody put in the comments on 25% off. If you believe in Delta, this is where we move from the fundamentals of a company to the sentiment of how you feel about a company. Here's some questions I would ask, right? Do you fly Delta? I don't really fly a lot, but I live in Atlanta. And I know that Delta pretty much is a stable company, is a staple, not stable, staple company that employs a lot of people in an international hub or metropolitan city. So I know because I live in Atlanta, I know how valuable Delta Airlines is to Atlanta, Georgia, particularly Atlanta, Georgia. So that's my connection to Delta Airlines, even though I don't spend my money flying on Delta. I'm just a road trip type of guy. I'd rather get in the car and drive to wherever it is I got to go versus get on an airplane. I just feel much safer there. But what about you? Do you believe in Delta? Do you have any connection to Delta some type of way? Have you spent money to help Delta be profitable, right? What's going on? I think they would have been triple digits if it wasn't for 9/11. Okay, got you, man. He said, man, he think Delta would have been triple digits if it wasn't for 9/11. I forgot about that. I know that was an airline, a plane hitting a building, but what airline did that come from? I don't think that was Delta. I doubt. Maybe I don't know. I seriously doubt that was a Delta airplane that hit the Twin Towers, but it could have been, but I doubt it. I think it was probably something else. When stuff like that happens, it's normally not connected to some big brand that we know and love here in the United States. Let's keep going. But you gotta let me know. Somebody do some research real quick. What if we the planes that hit 9/11, the planes that hit the Twin Towers, what planes did that what company did those planes represent? Or were they private planes? You know what I'm saying? I wonder. Makes me wonder now. You brought that up, Peter. You got me thinking now. All right, let's keep going. So what's your connection to Delta, though? Right? If you believe in Delta, right? What's your connection to Delta if you believe in Delta at all? Right? You may not have any connection, may not believe it, but let's keep going. So Delta Airlines averages the provision of a schedule and air transportation for passengers and cargo. It operates through the airline and refinery segments. The airline segment provides scheduled transportation to passengers and cargo. The refinery segment consists of jet fuel and other non-jet fuel products. So they transport. We may know Delta from the going from city to city, country to country, but they also transport jet fuel and stuff like that as a cargo, right? I never even think about that side of Delta Airlines when I look at Delta Airlines. But yes, right, you transport by sea, by train, by airplane. I think there's a song. You can reach me by trailways. You can something like that. Yeah, we can reach me by aeroplane. Somebody Phyllis, I know you know that song. Who sings that song? You can reach me something. That sound like Layla Hathaway or something like that. Anyway, the company was founded by Colette Everman in 1928 and is headquartered in Atlanta, Georgia. So almost a 100-year-old company. That's why I say at $29 billion company, $29 billion market cap doesn't make sense for me for it to be around 100 years and it's only a $29 billion company. It was United Airlines. Oh, my brother over Antoine Lauer said it was United Airlines. It was a United Airline that hit the Twin Towers. So Peter, help me out here. 100-year-old company that's doing transportation, probably one of the largest airlines in the world. It's only a $29 billion company. I can't fathom why they're so small. I can't fathom why they're so small. Somebody help me out. 100-year-old company that's been in transportation and cargo that's only $29 billion large. It's only, I know I'm saying only, but that just seems small. So a lot of people are flying after the incident. I know that's right. Okay, let's keep going. I'll be getting into this stuff. I'm sorry, guys. All right. I just don't get it. I don't get it. All right. But anyway, over the past 5 years, Delta has increased in their employees, right? They've been hiring. They have been firing. When we start seeing firing, that's a good sign that companies going in the wrong direction. That's a good sign that they're not having as much business as they used to have. When we see companies hiring, that means they probably got more contracts, got more airports that they service, got more. They doing more business. They got to hire more people. That's a good indication that the company is stable. The company is doing well. Now Delta is in the Dow. It is one of the stable companies in America. It's one of the companies that makes America run. Is Delta in the Dow? I believe they're in the Dow. I had to check that. I believe they're in the Dow. Let's take a look. I believe that they are in the Dow. I could be wrong, but I believe they're in the Dow. They're not in the Dow. This is an alphabetical order. They're not. Delta Airlines is not in the Dow. Here, I'm just looking at all 30 companies. Delta Airlines is not in the Dow. Okay, so they're not in the Dow. They're not a part of the Dow. So they're not a part of they're not considered to be a part of what makes America great. Okay. When you look at the Dow, just think of make America great. And we need all the companies in the Dow, right, to do well so that we can make America great again. Okay. Delta Airlines not in the Dow. So I learned something new myself. I thought that they were. So anyway, we'll take a look here. We're kind of looking at forecasts already, guys. This is just where analysts are saying that, who have looked at this. Only 16 analysts have even evaluated Delta. That seems low, right, for a company like this. That's it's when you don't see 16 versus 36. Well, I really want to see about over 20 analysts analyze some particular stock. That tells me that there's a lot of eyes, in my opinion, on that stock. 16 analysts. That's a little low to me. Like, What's going on where people are not even interested in Delta Airlines, interested enough even to evaluate the company? At any rate, out of those 16, we already took a look at that. You had 18 who and there was an 18 poll that said, hey man, should we buy Delta right now, sell Delta right now, whatever. They basically 18 out of the 18, they said that, hey, 10 analysts say you should buy it right now. 2 say outperform, 6 say hold. Nobody says sell. Don't sell. Hold if you got it, buy it if you want it. But don't sell it if you got it. That's basically what they just said, right? This is just what analysts say. But I want to see more analysts, right, evaluating this company. And I guess I'm the next analyst because I'm an analyst myself. I guess that's what I am. I'm an analyst myself. Delta Airlines, man, take a look at the fundamentals. Now, we talked about sentiment. Sentiment being how you feel about a particular company. Sentiment being how others feel about a particular company. Sentiment being how the market feels about a particular company, right? Good morning to you. What's going on? Oh, you just getting up? That's okay. We're still here rocking and roll. Fundamentals is really just what the numbers say. This is the money behind the company. Of course, we're still waiting on 2019 results. We can probably see that on the website. Delta revenue growth over the past 4 years has increased, right, from 40 billion to now 44 billion. But I think it's pretty steady over past 4 years of 2018. Their gross income has decreased. So although they sold more stuff, they have made less money. They sold more stuff, but they made less money. Which says that their net income probably has decreased. That's a bad sign. That's a bad sign. Right? You sold more stuff. Think about this, Jay's Beauty. Right? You're in business. Anybody else in business that's watching right now? Who else is in business? Matter of fact, if you're in business, go ahead and put in the comments below the name of your business. If you're in business, go ahead and put in the comments below the name of your business. This is why I think talking about the stock market is so very phenomenal for people who have a business mind, because these are some things that we should be doing. These all these books and stuff like that, stuff I got to get better at myself, right? We lost sound. Oh, you guys can't hear me anymore over Facebook? That's not good. Oh, that was on your end? Okay. Whew. All right. Okay. So if you got a company, if you run a company, you got a business, even if you don't run a company, but you got a business idea, or you kind of do your little, you get your little Etsy, your little side hustle, whatever. If that's you, go ahead and put in the comments below the name of your business or maybe what you do. So as a business mind, as a money person, think about this. How every year you're increasing, right? Every year you sell more stuff. You sell more stuff this year than you did last year. You sell more stuff next year, more stuff next year than you did this year, right? So Phyllis, HP Naturals, right? Got some naturals. Fine, okay, fantastic. I don't know what is HP Naturals. Is it natural? What is it? What is it? What do you sell? Right? What do you sell? If you're in business, what do you sell? I want to know what you sell. Right? Name your business and what you sell. I know Jay's Beauty, you're a beauty supply, so you probably sell a lot of cosmetics and stuff and hair and stuff like that. If you're in business, what's the name of your business? What do you sell? All right. So if every year you sell more stuff, you make more sales, you buy more product, you selling more product. Every year you selling more product. Every year you selling more product. But then when you do the numbers, you're making less money. Houston, we have a problem. Every year you're selling more stuff, but you're making less money. When I say you're making less money, I'm saying your profits are decreasing, although your sales are increasing. Houston, we have a problem. So Antoine Lara over Instagram said, man, ITW Investments LLC, inspire thy world. That's what ITW stands for. He's got a clothing line and a top of the line cleaning service and landscaping service. Jay's Beauty, she sells cosmetics and women's design accessories and handbags. Thanks so much for the great descriptions, guys. You just never know who's watching. This might look you up. ITW Investments LLC, right? Jay's Beauty and more, right? Phyllis, I'm sorry, we got HP Naturals, which is superfoods. And I did not know, Phyllis, that you sold superfood. You got superfoods and essential oils. What? Make sure you inbox me, Phyllis, a link to your company. I did not know this. All this time that I known you, Phyllis, I did not know that you sold superfoods and essential oil. What's going on? How I don't know that? And as long as I know, you see the problem? You see the problem, guys? You see how you can know somebody for so long and you don't even spend no money with them because you never know that they got stuff to sell? Superfoods, what a great time to be selling superfoods and essential oils. I've known you, Phyllis, what, 3 years, 2 years? And I did not know that you sell superfood. What's going on, people? See the problem? See the problem we got? The problem we got is marketing, guys. We're not talking enough about what we do. Now, y'all know what I do because I talk about what I do all the time, right? Look at it. Peter Grant said, man, he wants superfood. We got somebody online that got superfood, essential oils, and so thank God I asked about y'all selling what y'all do for business because somebody else said, man, I want some superfood. Just like that, you can have a sale. Man, we got to do a better job at marketing, I'm telling you. James Buse said, man, you have to increase the numbers with the market. You have to know what the market has. Best thing I ever did. Thanks for the free marketing, the plug. Absolutely. So, wow. Okay, Philip, you make sure I got to take a look and see what you do. They're going to go a little bit longer because I'm going to keep on talking. Now, so you're selling more stuff, right? Every year you're selling more. You say you're going through product like crazy. But when you do the numbers, you're making less profit. Not that you're making less income, you're making less profit. Why is that? How is that possible? Right? Make sure you inbox it to me, Phyllis. Make sure you inbox it to me. I'll pull it up on the screen, but inbox it to me so I can take a look at it. I can just click the link. Inbox ERGJ Enterprise this link, and I just click the link and go to it. How is this, if you're selling more stuff but making less profit year in and year out? How's that possible? Somebody tell me how that's possible. What's some factors that could go into that could be a part of you and I in business, selling more stuff, you know what I'm saying? We just turning over stuff. I'm selling more superfood every year. Everybody buying, everybody coming to buy. I'm selling more, I got more contracts going on in landscaping. You know what I'm saying? I'm selling more clothes, right? I'm selling more cosmetics and women's design. Every year I'm like, dang, I just sold all this stuff. But then when I look at the numbers, when I do my numbers, right, I'm making less profit. I'm making less profit. Woo! Everybody put in comments below the numbers. This is why the numbers are so important. This is also can go into the reason why they're not bigger than a $29 billion company. What? Houston, we have a problem. Everybody else. So Peter said inflation, right? So he's basically saying that, hey, I'm probably keeping my prices the same, although the cost for me acquiring these products has gone up. Inflation. The cost of, not only is it the cost of you and I buying stuff, it's the cost of those companies doing business. Cost of business goes up, although you try to keep your prices the same. Or let's just say not only just inflation, Peter, let's also say competition. You can't go up in your prices because you have something like a Spirit come in and say we're gonna give free flights or free bag check-in, so you can't make money off the check-in bags no more, right? So you got competition, you got inflation. What else could be causing you to sell more stuff year in and year out, but make less profit? Whoo, that's tough. Oh Lord, why be in business? We're gonna do it like that. Instagram, we're gonna lose you, man. I only got an hour on Instagram. We got about 30 seconds left. If you guys want to finish watching the show, make sure you tune in over at Facebook and or YouTube. So Instagram, we're gonna lose you in 17 seconds, man. Great conversation we're having this morning. But make sure that's why you got to follow me on YouTube or Facebook, because I only get an hour on Instagram, guys. I really do appreciate you guys. I know you guys moving around and stuff like that. You probably just catch me on your phone app. Go over to YouTube or Facebook or your app, same thing. And we can still kind of rock together over here on for the Money and Power Show, guys. Okay, Money and Power Show. Keep on going. All right, keep on going. So this is interesting, man. The net revenues is declining while the net income is declining, while net sales and net revenue is increasing. Net revenue is increasing, net income decreasing. Whoa, my goodness. Yikes. All right. Let's take a look at what they own, what they owe. Man, that's a problem. That is a problem. So although they're one of the biggest companies, so the cash asset, man, the total assets, this is basically what they own as far as what they have acquired and that they own as a company. In case you don't know, as a business, you can own stuff, right? They got $60.3 billion worth of stuff that they own. Their total liabilities this is what they owe, $46.8 billion, right? And so they're only $13.78 billion in shareholder equity. I'm really, this is a problem, guys. Here's the deal. You're a $29 billion company, right? But you only have $13 billion worth of shareholder equity. Now, although they are in the positive as far as the plus, they're in the black. They're good as far as what they own versus what they owe. It's only only 25% difference. Yeah, that's for them to be around for 100 years. That's not good. I mean, that's like that's like meh. You know what I'm saying? It's nothing that's like, I see why only 16 analysts have analyzed this company. They're not doing, I mean, they're still in business. They're going to stay in business, but they're not really rocking it. You know what I'm saying? They're not really killing the game. They're flying people, they're flying stuff, but they're pretty much when it comes to their stock, when it comes to them as a company. Not that they're going out of business, they can still hire people, still bring great value to Atlanta, but you sell more stuff, make less money, right? Over 100 years in business, you're only a $29 billion company, but yet you're doing international business, right? I don't see it. Now, you know what happened this morning, guys? I was over in my Cash App, doing my little Cash App investment. I put in a little order. I was like, let me go ahead and buy Delta. That's before I did my analysis this morning. And you know what I'm going to do? I'm going to go ahead and cancel that order before 9:30. Right? Anything good about that? Man, Peter said, man, tax, rent, or mortgage may increase. Yeah, some increase in cost. That's the cost of doing business, right? Oh my goodness. Okay. Wait a second, guy. I gotta go on my phone. I gotta cancel my I gotta cancel my order. Thank God it was scheduled. It was scheduled. Oh, let me cancel that. Whoo, Lord. I canceled that thing, guy. Whoo, Lord. I'm so glad we take a look at this morning because I'm about to make a mistake, right? Now, why am I saying this, right? I'm not saying that, for me, right? Listen, for me, as I look at Delta, here's what I look for. I look for all signs pointing to go, right? When I do my little checks and balances and I see green, saying go, saying don't pass go without collecting your $200. I'm on the Monopoly board and I see go get your $200. I'm like, let's go. But when I see green, then yellow, then red, then yellow, then I'll be like, wait, I'll be pausing for the calls. I say, no, it ain't. I don't see all signs ain't pointing to go. So guess what? Evan don't go. I go ahead and pass without collecting because it ain't no collection there in my opinion. That doesn't mean that you don't find some value, particularly in Delta Airlines. Hey, that's you, right? I'm just talking about what ERGJ is looking at and what ERGJ say for ERGJ portfolio because you got to deal with your money and I got to deal with my money. It's all personal. Yes, it's personal. Oh Lord, yes, it's personal. At any rate, we'll go over here to Delta Airlines, their website, guys. This is where you find, really all of your investor information. And of course, it's going to be very difficult probably for me to find this because, it's not going to be difficult. We come down here. Okay, got investor relations. So as an investor, you come over here to investor relations. You see they keep that stuff updated. This is right from the horse's mouth. Right, they got a presentation March 10th. Or they had today at JP Morgan Industrial Conference, a webcast presentation. Probably can tune into that if you wanted to. If you were interested in this, 43.52 is a stock down $2.37 yesterday, 5% loss, right? They got corporate profile. They got some stock information up here. The delta difference. Why they want to. Basically, they're doing their best with their website to encourage you to become a stockholder of their company. That's what this is all about, right? They say, hey, because they want to use your money that you invest into them in order to be able to increase or continue to grow their company. It's a stable company, but it just don't feel like it's going to rock. It's going to kill the game. I need companies in my portfolio that's going to kill the game. That's, everybody's got a different psyche. I'm aggressive as all get out. I'm not conservative. If you're conservative, hey, I can help you find some conservative stocks that you can just kind of, you can just slow and steady. I am aggressive. I'm aggressive conservative. No, I'm nowhere near conservative. I'm going for the jugular. I typically don't lose much, but I typically, man, you know what I'm saying? I like this. I want 20, 30%, 40% if I can get it, right? I want my cake and I want to eat it too. That's just how I think. I mean, if I'm gonna go, if you ain't gonna go hard, go home. That's how I look at it. Now, that may not be you. So that's why we have, an investor profile. Got to figure out, okay, what type of investor are you? How, how when it comes to risk, how risk averse are you, right? So I don't really make recommendations for people who have not gone through my process of really determining what type of investor they are. Does that make sense? Everybody put also profile, right? People know me, Fate. Oh Lord, Giorgio, thanks so much for joining, Giorgio Ricky. I don't speak Spanish. I think that's Spanish. If it's in English, I can read it. I can read the Spanish. Porque non mi fait plus la raison. Okay, now I don't know what that says, Georgina. I'm gonna have to look that up. I wish I could copy your statement so that that's not gonna work. I'll have to go look that up later. I'm back. All right. Gotta go to investor profile so we can see what type of investor you are, and then we can start talking about your portfolio, your IRA, your 401k, so we can see what's the best place for you to put your money, because it's a personal decision. Everybody put guys on, it's personal. It's a personal decision. I can help you with assessment, but the decision is personal, so I have to find out what type of person you are, right? I throw caution to the wind. I mean, I'm cautious because I see yellow flags, but I throw caution to the wind. So Delta Airlines, guys, dividend history. Okay. So 219, this is like a month ago, they paid out 40 cents per share. This is a quarterly. They went up 5 cents. Wow. 20 cents to 30 cents. So their dividends are increasing. That's okay. That's cool. So what that means, right? Let me see if I get my calculator. So 40 cents per share. All right. So 40 cents. We'll multiply that times 4 for the year, 1.6. And we're going to divide that 1.6 by 43, which is their stock price. So right now, if you were to invest in Delta, you would get an annual dividend yield of about 3.7%, right? Coming back to you. That would be paid back to you basically annually as a investor if you were to invest in Delta stock right now at the current price that it's at, based upon the dividend that they're paying right now. Cool thing is they have shown a history of increasing dividends. So although their stock hasn't necessarily, gone up, they have paid their shareholders for continuing to keep the faith. So when I look at dividend, I look at it like that. I look at a way of paying me to stay, right? Paying me to stay while y'all are selling more stuff but making less money. So that's a good thing. 3.7% is nothing to sneeze at when it comes to a dividend. So the thing is, man, but see how I look at it, I say this. First, I would have to say, well, am I a believer in the stock itself? Right? No. Am I a believer in the company itself? That's the first thing I want to answer for myself. Do I believe in this company? right? Do I believe that this company brings great value to the marketplace? Okay. Then I got to say, well, if I believe in the company and I believe that it brings great value to the marketplace, do I believe in its stock? That's when I do my stock analysis. I take a look at the stock, as we just did a little bit, and I start looking at, I start looking for clues, right? Is this something, do I believe in its stock? In this particular case, I don't believe in Delta Airlines stock. So I wouldn't even get to the point of, okay, let me look at, let me look at the dividend. Now, if you're a dividend investor, you may, because you're not really caring about ever selling the stock that you own, and you might just be looking to acquire that dividend. So when you see a 3.7% dividend on top of a stock that you believe in or a company that you believe in, you might not care about the stock of the company. But I'm not in it just for dividends. Let me say this: dividends are for our what we call income investors. Everybody putting comments on income. If you're an income investor is typically someone who has built up their cash reserves, their cash portfolios. They're ready for retirement. They don't know what to do with all the money that they got. They're doing the IRAs. They're doing this. They're doing that. They're trying to find places for their money to just sit somewhere, and they can just start earning. They become a lender and not a borrower. In order to be a lender, you got to have money. So they say, well, hey, I'm an income investor. I'm not really looking for much appreciation. I made a lot of money. I just want my money to earn money, and let me just let it keep doing what it do. This is typically older people. So they can say, man, a Delta Airlines, a company I believe in, you know what I'm saying? They bring great value. You know what I'm saying? I fly Delta all the time. I might as well own some stock, and I can go ahead and get some dividends while I wait. That could be their situation, right? That could be that personal situation. I'm not in that situation personally. So that's why I would not necessarily be investing in Delta right now where I'm at the stage of life that I'm in. But maybe if I was older, maybe if I had the cash reserves already up, if I had already been building wealth, I might say, man, that 3.72%, that looked pretty spicy. On top of a valuable company that I know is not going out of business anytime soon. It's been around for over 100 years. So you guys see how we can look at one particular company, but all these different philosophies or thought processes could go into whether I would invest based upon who I am, what I'm looking to do and accomplish, and where I am in life. So it's not all one and the same. But so what I did was I had already put a schedule to do a invest in Delta before I did the show. And then during the show, guess what I did? I went and counseled it because it doesn't fit my investor profile. And if you like to talk about your investor profile, what it is that you're looking for, you need help in that particular area, then of course you can always hit us up here at Facebook or Instagram. We can talk about setting up some type of session for you to be able to look at that. Those as part of the BBC, the Black Billionaires Club. That's something that's always available to you. So you can hit us up, let us know, go ahead and schedule your appointment, and we can take a look at what you guys got going on as well to be able to help you out with your investment decisions. So there's a couple opportunities for you guys that stayed with us through the show. I want to say thanks so much for tuning in with us. First, we do have an investment. We do have an investment club. If you want to be a part of that club, you check out our website, theblackbillionairesclub.com. The site is getting back up, so hopefully it'll be back up today. We had some server issues, but you can actually join our club and give an opportunity to invest with us. Also, if you need some assistance, you want some one-on-one attention, you want to have these discussions about your investor profile, we have discussions about your portfolio, you need a retirement review, you want to take a look at your current position and see what we can do about helping your position out if you're not doing so well. There's Safety and Wise Counsel. Reach out to us. You can set an appointment for a retirement review or an investor profile discussion. Inbox us, ERGJ Enterprises, on Facebook and or YouTube or Instagram, and we can set that stuff up for you. I'm not free when it comes to my one-on-one time, but we can have a free first consultation. We call a intake, and see how I can help you. Right, help you to build wealth. Right, through stock market investing, through Wall Street. I can help you build wealth through investing in the stock market. Anyway, guys, I'm your host, ERGJ. I want to welcome you to Wall Street here on the Money and Power Show. want to say thanks so much for tuning in with us here today. And I want you guys to remember this, that it takes a village. It starts with us. Let's build as we climb together. We all we got, beautiful people. Matter of fact, we all we need. And thank God that's more than enough. Until next episode, you know what time it is. Mr. DJ, hit the music.
The new Black Wall Street. Thanks you for joining the show. We gave a lot of great tips, but it's time to go. Take the knowledge we shared, hope you use it and grow. We will see you all there at the next episode of The New Black Wall Street. The New Black Wall Street.